All right. Good morning, everybody. It is oddly a little too quiet, and as we're going to see, the volume is a little too light. Something is going on out there. We just can't see what it is yet, but the market is waiting on something. My first bet would be the way that Europe is handling gilts this morning. Since they're a nation, it's around noon there. They're kind of midday through their trading cycle. Not a lot on the books today. Got some housing numbers. We do have a lot of Fed speakers in England, European central bankers. Continue to keep your eye on this story in China. They're not reporting their numbers correctly, which is, that's not a surprise. They lie about everything all the time anyways. They've reported 2 deaths, but they changed their qualifications on what a COVID death is and made it more restrictive. So somebody dies, they don't say it's COVID unless it meets these really strict standards. So their morgues are being overrun. Their cities are ghost towns because everybody is sick and hiding in their houses. The lockdowns are lessening. So the streets are empty, not because of the lockdown, but because nobody wants to go outside. There's been some grumblings in the banking and financial sector. It's going to be, since that's one of our risk on sectors, something you really want to watch, and energy as a backdrop. Those two, which have pretty much been my go-to most of 2022 for day trading and short-term trading, finance and energy. $8:30, 10 o'clock, 11:30, because we have additional auctions today. Really watch the clock at 11:30. I know that these don't get the attention that, CPI and FOMC and things like that. They don't get that kind of attention, but they don't have that kind of drama either. They're just enough in your trading day to really turn the tide on what a market has been doing. So, say we've been range bound all morning, and then 11:30 comes, these auctions hit. Suddenly we're not range bound anymore. We're finally breaking out and going. Or we've been trending all morning, kind of consolidate through lunch. These auctions hit and it flips everything around, or just straight up kills the trend. So it's more about, one, what have we been doing all morning? What's our expectation for the afternoon? Is it going to change because of these auctions? I mentioned the volume. You can see we're under 80. That's light on a day when we don't have a reason to see it so light, right? If this was a morning where we were expecting news at 8:30 this morning, it would make perfect sense, but there's no reason for it to be this light other than the market is waiting on something. And that should, give us pause. What's it waiting on? This is the last full week of the year for trading. After this, there'll be partial weeks into the new year. We got a very narrow IB. IB is initial balance. It's an open range of the first hour. And so you can see within the first hour, we really didn't do much. And although we are now finally outside of that initial balance, we really haven't done anything beyond that either. We're still below the weekly pivot, which puts us automatically in a defensive, more of a risk-off sentiment, bearish. So any moves to the upside, we're going to want to see it get past that from a bigger picture bias point of view. Lots of pivots. We've got an ADR of 1.88, which would be 39.10 for the ADR half. We'll call it 39.11, a cog line. And then 39.50 for the full ADR to the upside. And to the downside, 38.37, and then 3800. To get there, we would have to break out of yesterday's range. When we're speaking about yesterday's range, we've got one of those situations where we got a zone for the RTH and then another one for all of yesterday. So we have this very narrow range where we're trapped underneath the cash open and our own Globex low. Then we've got the zone for just the cash open. Each one of those are going to be pivot points. So our own Globex low today at 38.72. We come back down and make contact with this. We're going to expect at least a first touch bounce. And then if we break through that, a challenge of the low would be another first touch bounce. For the upside move, that cash open, as we've seen here this morning, so far has been a solid rejection level. Every time we get back to the cash open of yesterday, there's a very large seller sitting there, and buyers just haven't been able to either absorb all of that liquidity or push through it. They haven't been able to do either one yet. So we're looking for an inside day breakout to the downside, which would be easier than an inside day breakout to the upside. We'd need to get all the way up to 39.34 to break out of yesterday's range. Breaking out of the RTH high is not an inside day breakout. It's just getting through the RTH session. Day 30-minute volume profile. When we're at the bottom of the box, we expect to go to the top. When we're at the top, we expect to go to the bottom. We have some resistance at 39.38. It's where the point of control is. It's going to act a little bit like gravity. So if we begin moving back in that direction, get above 3900, it's very likely we're going to gravitate up to that 3940 area because of that point of control. It doesn't owe us that though, right? So kind of keep your eye on it. There's no expectation that when, it's not destined that we go there. There's nothing to the left. So if we break the low that we've got right now at this 38.55, we'll be focused on 3800. It's an air pocket down there, fast drop. Nothing to really slow us down or catch us. If we can get through the point of control and this other zone that was building where the TPO point of control is at call it 39.50, 39.60 area. there's no more resistance past that volume wise. We should be able to retest 4050, 4070, 4100. There's no expectation of that kind of run, however, without some change in market dynamics. Right now, all the breadth indicators are pointing to the downside. The hawkish stance from the Fed kind of put the fire out on any perceived opportunity for a Santa Claus rally. We're still seeing a lot of articles coming out showing how the smaller hedge funds really got ripped apart this year. We're going to be watching for just absolute capitulation, where they just throw up their hands and say, screw it, start dumping things. I'm going to make the argument that we have a VPOC under us from Friday. It's really close. We crossed through it at the open. But in a situation like this, you really need to just have a set of rules on how you're going to manage carrying forward things like a VPOC, and if you would count that or not. My rule says to count it, so I'm going to put it on there. It's not much of a surprise. If you think about it, it's Sunday's open, so it's a pivot either way, whether you mark it out as a VPOC or you mark it out as one of the open, high, low, close. Either way, it's a pivot point that would be recognized today. The only difference is if I mark it as a VPOC, it would still be in effect tomorrow, next week, next month, until we hit it. Whereas, a Sunday's open, I wouldn't carry it past the end of the week. If we hadn't hit it by the end of the week, I wouldn't continue to bring it forward. So I said 38.74. All right, on the ES, we are underneath the 10-day, about 1.6%. It's not extreme. There's been plenty of opportunities this year where we have gone way lower than this before consolidating, turning around, and kind of building our way back up in the other direction. This is kind of just helping us answer that question. Did we move too far last week, too fast? Are we oversold at this point? And the answer is no, not yet. Not on the daily anyways. Still plenty of room for a downside move before we'd even consider that we had gone too far. Change this perspective to the weekly, and we're just getting started. The average weekly reversal is near 4%, and we're not even below the 10-week by 1%. So we have plenty of room. All right, so there's literally no sector out of the 9 grid that we would focus on as a counter trend. Although there are still quite a few sectors holding up or really, really close to that 200-day moving average. It's going to be a big one for energy. We want to see energy maintain above that 200-day moving average. Even interacting with it this week around the $80 mark is going to be important. And that's if we even get back down there this week. Building materials, industrials, consumer staples, healthcare, utilities. I mean, these are all either at that 200 or above the 200. And the risk on names, which are the 3 across the top, finance, I'm going to be surprised if we don't get that 50. It takes so long for the market to change direction. I don't think it can change the direction of that 50 fast enough. I think we're almost destined to get a crossover at this point, but it won't matter either way if we continue to dump down. 200 rejection on tech. We didn't even get to that 200 to get rejected on consumer discretionary. Sorry, guys, just a second. I think I might have a lead on some of the news, why we're having such a low volume. All right. Nope. Never mind. All right. So natural gas is down this morning with the articles that we've been seeing, a lack of natural gas. The expectation would be, supply and demand suggests this should be working its way up, not down. And yet that's what we've got on the agenda this morning, down nearly 6% in natural gas. TLT right behind it, which is the 20-year bond. Gold, which there's no surprise on the gold side with US dollar China making moves to the upside this morning when the dollar faded back. But around 4 a.m., we started to get that rally back up in the dollar, which sent US dollar Japan and US dollar China back to the downside. Still, US dollar Japan is higher than it opened on the morning. And with that, you're going to see gold down a little bit. If you're in gold trades to the upside, you should probably be expecting a little consolidation anyways after their run. China really didn't enjoy that move up that Japan did with the weakness in the dollar in the overnight. And instead, it's getting ready to break new lows on the day. Japan's still going to be the one to watch, at least at this point. But we start to get an inside day breakout in US dollar China. I think we're going to circle back to that. It'll be a direct impact into commodities. And on a day like this, where we're seeing that pause in the market, I'll be a little uncertain on what is going on out there. It could be a market waiting on a catalyst, right? It's kind of hold my coffee and watch this thing, right? And they're just looking for an excuse. At this point, we need something to kick off. Want to pay particular attention to the European Central Bank speakers this morning, especially with all the nervousness and uncertainty around that gilts market and their bond trading this morning. All right, KWEB is up, which I was reading some articles this morning about Chinese investors fading China equities and then looking at global equities, and basically anywhere else. Now, rich investors in China can do what they want, but we know the China state banks are still, maintaining that mandate that they buy names and continue to buy. So we got a little bit of a back and forth going on. Take a look at KWEB. Yes, Nicole's absolutely right. The question is, light volume can move a market a long ways, right? And yes, it absolutely can move a market a long ways. When there's low volume, think of it from a dome, right? Turn on the active trader. So we're seeing, double digits here. That's not too bad. Imagine it was all single digits, like you see when you're looking at the NASDAQ. Anybody ever try to trade the NASDAQ usually says, oh, wow, this thing is really spiky. It just jumps all over the place. That's because it's got really light volume. Imagine the ES moving like the NASDAQ. Well, it would likely happen if the ES had single digits here instead of double digits. So a trader comes in on a light volume day and they've got deep pockets and decide, I'm going to get 30 of these things. How far would it go in a 30? Just in the snap of a finger, you take 30 contracts off the table. 2, 4, 5, 6, 10, 14, 18, 21, 27. We would end up traveling all the way up to 11,397 to get that order filled with just one contract. So light volume means that we could see a market move real fast if an order of any size comes in, just because there's no contracts to fill that order, and it's going to keep reaching up to fill it. Now, law states if we tick through an area that the orders are going to fill, right? But there's got to be something on the other side of that. I got assigned shares this morning in SPY. That's always fun. Those contracts still had 11 days left. It's a little bit of a surprise to ever see an assignment in SPY, especially 11 days out. Huh. Anyways. So mainly, this wait and see market is going to affect everything across the board and bring up some actual equity names. Right, we're looking at the Dow Jones here. It's a well-rounded index, 30 names. So Chevron, Apple, Microsoft, Nike's got earnings this week. The rest of these that are below 0.5% don't count for me. Need them higher than that. On the negative side, there's nothing. Let's do this a little differently. By the way, JP Morgan, I think it was JP Morgan, came out with their contrarian list for 2023, and Meta is on that. So if you want to go against the trend or against the herd, long Meta would be a contrarian play. It's on the list for 2023. Watching it for a 20 period weekly moving average crossover would be a pretty good play. You know, if you're looking for a solid swing or a breakout of this really big green candle, that 124 high, right? If you do trade a breakout of the 124, just be aware you got the 200 period weekly moving average over your head that has earlier this year acted as a pretty solid resistance level, right? So, you know, there's a considerable distance there. It's like $6. You could get in and get back out and then get back in again if it happens to actually make it through that 200. But it was on the list for contrarian plays. Funny enough, it's the only name this morning down 1% or more in the NASDAQ pre-market this morning. All right, 18% of the NASDAQ is up at least 0.5%. Tesla's getting a little bit of a move due to some shenanigans happening on Twitter. And then I see some China names here, JD, PDD. Not really enthusiastic about what we've got here. So that's the NASDAQ. Take a look at the S&P. 17% of the S&P this morning is up at least 0.5%. Energy names, some financials, MasterCard, Visa, JP Morgan, Wells Fargo, Charles Schwab. So a considerable number of financial names, some chip names, NVIDIA, AMD kind of stands out a little bit. And then energy. When I was new to trading, I really hated these heat maps. I thought, what a worthless tool. Who would ever use this? It has no value at all. That just showed that I didn't understand how to use it. Right? These things are really useful. We're looking at the S&P 500, and we don't want 500 names. We're going to try to dial it down to just about 100 names. Doesn't have to be perfect. Then we have a lot of gray here, and that's because it won't turn colors between red and green until the market has moved at least 0.5%, which is fine because that's kind of my benchmark number. You know, I want to see that the market's moved 0.5% up or down before I start to consider it. So I usually like to start this way, but then we want to adjust the color anyways and make it more responsive to these more subtle changes in the market. All right, so what stands out before I make that adjustment is we have a couple of the monsters of tech: Microsoft, Apple, Meta, NVIDIA, Amazon, Tesla. So all of those stand out. We can add to that a couple of names like, you know, we got Nike with earnings this week, couple of energy names, and some financials that stand out. It always stands out in financials because the S&P has financials, but the NASDAQ 100 does not. All right. So when you're doing this comparison in the morning, when you're looking at the NASDAQ, you have no financial companies in there, the NASDAQ 100. So when I make that adjustment, now it's a little more nuanced. It's interesting too that Meta continues to buck the trend. When everything was down, it was up. Now everything is up and it's down. Granted, we're not up by very much, but it kind of goes into that contrarian argument, right? And it was in an article that I couldn't share. You know, like when I share a Bloomberg article, I can usually gift it and share it in a way where everybody can read it. This was not one of those because it wasn't from Bloomberg. But after a few days, those sites that publish things that aren't shareable, it usually ends up in the public space anyways, and you can read it. It's a call for 2023, so reading it a week late isn't going to hurt anything. I can't stress enough to watch financials this morning. It's going to be finance and energy. I know it's hard to kind of take your eyes off of tech, especially when tech generally has better options. All right, so Walmart failed that breakout at the 154. It's got a nice rollover started. Just be careful because we're coming into a trend line. It's an angled trend line down here. We got the 5,200 crossing up. The next pivot here is 140. If we happen to overshoot that, we'd be looking at something like 138. But that's if we can get through it. And it's going to be a big if. It's a solid level. $139, $135, $132, and $128. That $139 in an overshoot kind of put us on the monthly low from November. So it's got a little bit of a bump up this morning. What we're going to be looking for is a rally into resistance before it rolls over and continues that move lower. There is a gap close or a gap that needs closed at 145. I don't think it's got that much in it. Right, we'll have to see how the morning unfolds. This pause in the market can kind of go either way. The longer we stay paused like this, the more energy it's building up. Might want to focus on Thursday's low. That'd be 143.63. It'd be a nice rejection against all this trash up here too. Kind of lines up really nice as a zone, right? Remember when you're drawing pivot points, trend lines, things like that. Imagine you're using a fat, dull crayon, not a clean, sharp pencil, right? Because we don't expect price to stop on a dime. And liquidity usually resides on the other side of the pivot point. So we kind of want price to go to the other side of the line. This is an island reversal also. Nice breakout on the zone if you're looking at a Busby. This is a weekly Busby. If that Busby holds true, then there would be a bounce here somewhere around the 142.5, right around in there. And it would owe us right back up into the 170 or the 154 area. All right, ExxonMobil is another name that's up this morning. It's a significant pivot at $99. But since we're headed to the upside, we have a minor pivot 105.5 and another one at 107.5. And there's a gap to close. At 106.5. So just about $1 difference between the three of those. I think the range is pretty obvious. But over the last, I'll call it last week, we've got a really solid low around that 102 area. And a high with a peak out at that 106 area. So I'm going to be looking for a rejection here. I think it's still too early for energy. Right? It's always hard trying to time energy, but I think we're a little early. I don't expect it to sustain this rally. So I'm going to be looking for a reversal here around that 106.5. Could get an overshoot to 107. If we get into that 107 and make it through, we'll be looking for a breakout of the 108.5, which puts us back into 112 territory. Right, so we're talking about midway up through this zone. The massive candle from the first week of December is the one that we've got to get out of. Right, until we get above that, there's no claim for any kind of bullish move. This would just be bouncing off of support and rallying into resistance. Market's waking up. I don't know. I don't see anything on there. So let's talk big picture and wrap it up for the morning. Big picture. We had been waiting to get out of this box for a considerable period of time. Weeks. And we finally got outside the box. The box that we had been using was this box here. I'm going to go ahead and continue to use that one, even though in a lot of my work, I've already adjusted to this really big green candle, but we'll keep the old box. So that was the box. And we had a little bit of a peak out, right? And that failed. That was the start of the rollover. And 3750 is the first measurement to the downside. And of course, we're not looking at a straight line shot, right? It's going to come up, it's going to go down. We would probably all get a little bit freaked out if it, moved in one direction without pulling back. Two-sided trading. Now on the daily, I had done a video when there was still some value to it, that rising wedge. And in the video, I had stated, once we broke out of that rising wedge to the downside, it would be very odd to ever see a market break a rising wedge to the downside and then decide to come back in and make it through the top. And what we would instead probably see is a breakout to the downside, a Busby back into the bottom of it, and then a continuation of the move. The only thing that caused a little bit of concern is when we broke out of this to the downside on a weekly time frame, it could have just wicked out of the box and then came back in again. The week hadn't closed yet, so we couldn't definitively say that we had a rising wedge breakout until the week closed, right? Well, that was 2 weeks ago. Last week, we had all the CPI, PPI, FOMC kind of, that hodgepodge mess, which still kept us outside of the rising wedge. We're on track. We're doing exactly what it's supposed to do. Technical analysis laid this all out for us in advance. If we were to get a downside breakout, we would very likely pull up after hitting resistance, drop back down. We're on track. There is a really big gap that needs to be filled down here. It's massive, and it's not just on the S&P. This gap exists on a number of names out there. This is one of the most bullish moves you could ever see. Closing on the low of a day like that, getting a pre-market rally all the way outside of your entire trading day, gapping up even beyond that to open completely above the entire market structure, and then with no wick to the downside at all, print a bullish Haramni upward. So this is a gapped up bullish Haramni, changing from a red to green on a daily off of a trend line. It's phenomenal. And yet the follow through, there's like none, right? This thing did not follow through the way you would expect it to after such a powerful, significant gap up. But these are now our magnets that we want to focus on. Some minor pivots on the spot where we opened. So that bullish Haramni, the open of the red day, and the close of the red day. Now, in technical analysis, a lot of people will say, as soon as we get into the size of this candle, if we get in there at all, the gap is closed. And that's fine. I don't begrudge them, right? Technical analysis is not some exact perfect science. There is, a little bit of user input on how you want to do things. Me, I don't do it that way. As far as I'm concerned, if we closed here and we opened here, then that is the gap that needs to be filled. It has to get back down to where we closed. And until we do, the gap's not closed, which puts 3750 on the table. Now that gap could stay unclosed for years and years. It doesn't owe us a gap close immediately. Markets just, generally tend to close their gap pretty quick. We're slightly bullish this morning. So even though we're looking at the SPX, the ES, well, before that little bit of a move that we just got, was positive on the day. Now I'm looking at SPY and it's no change on the day. All right, so the ES, 0.1% this morning, just slightly up. $36.92, $35.30, and $33.68. That's from measuring last week's really big candle. For any kind of move to the upside, if we were to start traveling back up through this zone, 39.36, which is really close to that 39.30 cog line, and then 40.17, and beyond that, 40.98. It makes sense to expect a rally into resistance. So, no surprise there. But I don't think it's got it in it to make it back up all the way into 40.98 without some catalyst or news to galvanize that move. All right, so 39.36, sure, we got that in us. But getting through this 50% mark, I don't think so. And when it comes to analysis, when you measure something like this, the 50% mark becomes really critical. We can go up as long as we don't close above that level. We would still maintain our bearish posture. We get above 40.17, call it 40.18, then it negates the idea that we have to be bearish, and we would have to look for either, confirming bullish signals or a restart of a bearish move at that point. Continue to watch the news really close this morning. The market is waiting on something and we can't see what it is. I don't think it's going to take much to push this thing in one direction or another. So with these Bank of England speakers, they have the capacity to really rock this market. So watch for those. And otherwise, my recommendation is to hold out and get out of this zone. I know it seems plenty wide. I get it. There's plenty of room here. But until we get out of this, we don't have anything really. We don't have a bias to play. This is plenty of room. If you wanted to just, trade reversals, high to low, low to high, but it's very likely going to be, choppy, quick reversals, things like that. Whereas if we can break above that 39.36, there's not a lot of liquidity to resist us for a good trending move back up to that 40.17, and a breakdown below 38.50 will be a nice clean shot to 3,800 flat. So there's some good trading to be had with a little bit of patience. If you did want to break it into zones, just like we talked about earlier, just trade Globex high to Globex low. That'd be your zone 1. And then zone 2 would get you to the top. That'd be the high of yesterday. With zone 3, the low of yesterday. So you can put it into 3 quadrants. Everybody be careful. Be safe. I'll see you all tomorrow.